Well, time for some economic predictions for 2014. This is not going to be difficult because we got the expert, the cat. I'm just kidding about the cat, you know. But it might as well be because, you know, there's so much bullshit out there. But actually, I'll tell you the truth, I'm probably going to nail it good because I'm going to go buy my own stuff, you know, my own common sense logic and stuff. And he's responsible for half the cat coin production. You know, physical cat coins versus electronic doggy coins. But, you know, it's going to actually be pretty simple. Because, you know, I've been saying that the equities markets, well, since 2009, they went up a few times. You know, since the crash of 2009. That's a hell of a gain. And in 2013, none of the experts really expected the equities to do that well in 2013, before the beginning of the year, correct? And then they had a surprisingly good year. Now you're looking at like places like Citibank and some of the experts coming from these mega banks, and you know, I think it's disinformation. They're telling you that they think 2014 is going to be a good year. It's going to go to the moon and all this. I think there's going to be a crash, man. You know, because I've been bringing up that stuff from way back, actually earlier in 2013. I talked about they already had 2 Hindenburg omens, then there was 6 Hindenburg omens, and the last time they had that was before the 2008-2009 crash of the markets. And you know, it's just a matter of time. It's just a matter of time. There's nothing really holding up the equities now in real production. Yes, you could look at the GDP numbers and say, oh yeah, the GDP numbers are going up. But two different things maybe I just look at real simplistically, and actually these simplistic things are very obvious and very important. It's almost like you can't ignore facts. It's like a piece of granite rock. You can bang your head against it, man, but it's there, man. You know, you want to ignore it, go right ahead. But these two simplistic things are, for one, yeah, the GDP's been going up, but the GDP consists also of government spending. And government spending has been going up, and government debt has been going up. If you take out the excessive government, you know, in other words, we've had more debt piled on during the Obama administration than all the debt added in the entire United States history. So that has been a lot of the reason why the GDP has been going up. You take that out, all that excess government spending fueled by excessive record debt, and we actually have a contraction in the economy. So why is the stocks going up? Because the big banks are holding them up. But also the big banks are telling you, hey, it's good to go. Hey, no problem. The coast is clear. Bullshit. Actually, they were telling people that back before the 1929 crash, too. You know, and it's nothing to actually have a 30 or 40% correction. But, you know, if you get caught in an equities, if you get caught in a correction of 30% or more, you know, you're better off holding for a couple of years or a few years. That's why you never freaking stay all in one area. You know, it's people that speculate and go all out into something. That's when they get slaughtered. Or they can either make a lot of money or they can get slaughtered. But usually they get slaughtered. But there's been times back, actually, in the 1932, they had like a 90% correction in the markets. That won't happen today because there's ways, you know, they nickname it the plunge protection team, but basically they got ways they could stop it from going down that far. They will not allow it to go down that far. But it could have a 30 or 40% correction. They could do that. So, you know, it's happened before. And then from there, of course, it can go way up to 20,000 or more, the Dow, let's say, for instance. Now, silver, the predictions back in 2012, well, actually 2011, well, you saw a lot of predictions about going to 100 or at least 75 by the end of 2011. And then there was about a good 60 bucks or so was predicted for 2012. And then in 2013, actually, if you take the establishment analysts out there, I'm not even talking the alternative people and, you know, the silver bloggers. In 2013, there was over 40 different analysts out there, not talking just, you know, the typical ones you hear like Mike Maloney or David Morgan. I think David Morgan put this number out too. They said silver would go up to about $40 sometime during the year of 2013. And, you know, that doesn't seem, at the time, it didn't seem that unreasonable. because, you know, it had been over $40 for quite some period of time too, just in 2011. And of course we had the major crash and the major sell-off, with Goldman Sachs telling everybody, warning everybody to sell off gold. But what is Goldman Sachs doing afterwards? They were actually buying gold. This is where I think in 2014 we're going to see a run-up in gold. Now, if it goes up really a lot, I think it's going to crash again. Because, you know, nobody, you got to remember, you got to put this in perspective, because, you know, say for instance somebody's investing $50,000 in gold or something, right? If they got double their money or 2.5 times their money, they got a $50,000 or $75,000 profit. But you know, some of these people, they want to have millions right off the bat. And I'm talking like, you know, I don't even know what the average investor is. You know, it could be less than that or more than that or whatever, right? But they want to get like 10 times, so it'll hold. But if you get double on something or triple on something, it could go to 10 times sometime. At one point in time, if there's a real panic into the metals that doesn't make any sense at all, fundamentally, oh, you know, the silver bloggers and gold bloggers will be telling you all those fundamental reasons why it's running out. But, you know, if you can go walk into, you know, buy a house for, you know, a couple hundred ounces of silver, I'm telling you right now, that's way up there, man. That's way the hell up there. And you'll see this as evident by the silver-gold ratio. And I don't think that's coming up for a few years. But, you know, I've been harping on this, I think every 3 years it seems to be a height. And looking at some of these lunar cycles, I don't know much about this lunar astrology stuff. Not at all, but I think there's a little bit to it. But, you know, it looks like possibly in 2015, we might have, you know, after a run up in the metals, we might have a run down, a crash again, or somewhere around that time. If they get too far ahead of themselves, forget it. You know, the whole wild card thing I always said was more in the Middle East too. That's another thing. You know, Netanyahu almost, you know, it was very close that he was going to do a strike on Iran in late spring of 2012, and that would have brought up silver and oil and gold. All that stuff would have went up a lot, a lot. Even silver, gold and oil definitely, and silver it would have gave it a major boost. So sometimes outside black swan events can actually cause things to happen, you know, and move silver exponentially fast. But the fact that they dissuaded people from getting out of the metals, they told all the average investors get out of the metals, while Goldman Sachs is buying and George Soros is holding a lot of miners and stuff like that, and the six largest bullion banks in the world are net long on gold as of May 2013. Tells me we may be in for a run-up. But how high is high? You know, if silver does, you know, where I really get nervous if it gets anywhere near 50. Because I can almost guarantee you silver's not, I don't think silver's going to go from like to 100 something right away. I mean, if something doubled, you made a hell of a lot of money. You got to figure this: if somebody had, you know, $20 million down on precious metals, and they got double or triple their money, you got to remember what kind of gain that is. You know, in absolutes. You know, it's like, you know, when people have a little bit of money, they want to make a great deal of money. So sometimes they want to hold on too long because they're thinking they want to get 10 times to get a lot of money. You see what I'm saying? But 2 times is a lot of money. 2.5 times or 3 times is a hell of a lot of big gain. Is a big gain. And you know, it's not that impossible to do, because it has happened many times, even in individual stocks left and right. And commodities are noted for being extremely volatile, extremely high risk, and also can be high reward. So now that, you know, the mines aren't making that much money and stuff like that, you can figure silver and gold are pretty good bets, and platinum and palladium. So, you know, I do expect that, you know, 2014 is going to be a very good year for the metals. And but if it gets to be an outstanding year, beware, beware. You know, I'm not of the type that I would sell all metals, but I'll be selling. I'll be selling. Oh, especially the electronic accounts. If the thing went up a lot, electronic accounts, goodbye. The only thing that would keep me from not selling too much is that I don't want to get hit with paying a lot of taxes. That would be the main thing. That would be the main thing. It's like I don't want to make too much money. That's the one thing I wouldn't want to sell all of it for. But, you know, if silver does go up to 50, you should unload somewhere your stash, I would think. You know, and, you know, you're going to have everybody out there telling you the sky's falling if it goes that freaking high. I think it's going to have a very good year in 2014. And especially since a lot of people in the silver blogger world have thrown in the towel. Oh, that's the best sign in the world, man. Oh, that is fantastic. That's, you know, I've been waiting for that shit. I was waiting for when a lot of these people are going to throw in the towel, and I said, man, that is one of the best signs out there going. Because now I'm feeling more confident just because of that, too. But, you know, you have to figure, you know, it's an essential element that's used widely throughout industry. The only thing that's used more widely than silver is oil. And if the mines aren't making much money or actually losing money in a lot of cases, because if you know the cost of mining and silver, of copper and silver, and copper prices are way depressed, you know, that was the other indication I was going to say. The second thing that shows you the economy is not good. The copper prices have been dropping the last couple of years. They don't call it Dr. Copper for nothing. You know, it's a good indication of what's really going on in the economy, how much productivity is going on. And actually, even as a side note, they say there's an actual labor shortage in the construction and manufacturing industries in the United States. You know, in that particular, because they says, what happened to all the construction workers during the boom? Where'd they go? If there's another construction boom coming on, where would they get the workers from? You know, actually, would that cause the labor rates to go up? You know, I don't think they have to worry about that, because I think there's actually going to be more indications that there's a slump in the real estate market coming on anew, because home sales have slowed down. They have slowed down. Actually, they have been slowing down. It's like the revenue's been going up, but the number of homes has been slowing down that have been sold. Which tells you if the revenue's going up, that means there's bigger ticket items being sold. And it's not like there's a burgeoning industry going on with the average middle class. There's not. There's none at all. There's none at all. So, but you know, that's another indication, because the economy, actually 50% of the economy is construction and real estate related. If you take all the corollary and you know, related industries to the construction and real estate industry, that is actually 50% of the economy. And that looks like it's slowing down. And it looks like it's slowing down with extremely low interest rates. So what are you going to do? That's why, and I'm going to tell you the other reason I think I should elaborate a little more on this, because, you know, I saw some people would say, well, if the equities go down, wouldn't silver and gold go down? But you know what could actually cause the equities to go down is because of the budget problems in Washington that have been forestalled since October of 2013. Now they're coming up in 2014. You know, the major media is saying they're all ironed out, but you know what? They're not all ironed out. So, you know, because you know they're telling you one thing, but you know when it comes down to like, hey, here's the real budget, you're to see the same people that blocked it and shut down the government before going to come out. And that's because, you know, we can't be adding this kind of debt every year to the government budget, because it's going to break the United States. And I guess that's what their plan is. But, you know, is that going to cause a problem in the markets and the dollar? Yes. But, you know, if there's a problem in the markets and the dollar and the outlook of the, you know, the bonds and the full faith and credit of the United States, and the dollar itself, if there's any kind of negative comments like that coming from the rating agencies themselves, what is that going to do to the price of gold? Oh, it's going to drive it way up, and the markets will go way down. You see? I mean, I think that's a likely scenario, and that scenario should have come about in October, but they forestalled it. But it's coming up again here. They forestalled it to the beginning of 2014. So, you know, some people say, you know, if the markets go down, why wouldn't silver and gold and everything else go down? That's why. Because if the dollar looks like it's not as stable or strong, or the government doesn't look like it's stable or strong, people run into the precious metals. That's what happens. But there's going to be a limit to how high it can go if it does freaking take off like a rocket. And I mean, I don't know how high is high. That's where I get nervous. Because say silver went up to $40, I'd be getting very nervous. And if it went to 50, you see, it could actually go past 50. If it goes through 50, it could go to 72, or 72 to 75. You know, because actually, if it goes solidly through 50, it's, you know, it's kind of like, you know, it's a new territory again. So it could go pretty high. But if it goes solidly through 50, I'll guarantee you, every single pumper out there on silver is going to be talking about at least 100, 500,000 immediately. And that I almost, not that I noticed for absolutely certain, but I almost pretty damn sure it's not going to go there. It's probably going to crash below 50. So anyway, my predictions actually for 2014 is there's going to be a stock market crash, and there's going to be a run up in the metals. But there's not going to be a permanent stock market crash because they'll fix it. And they'll start doing the same policies they did before with more and more QE. And if the metals get too far ahead of themselves, they're going to crash. And I think the final time when the metals go way up might be a few years down the road, like 2017. I don't know what's going to happen then, but there's going to, you know, there's a limit to how much the government can add. You know, we're at $17 trillion of debt. There's a limit. There's a limit. You know, it hasn't broke down yet. The whole system hasn't crashed yet, but it's going to happen, man. It's going to happen. You know, there's a limit to how far it can go. And it looks like it's being deliberately done this way. It's not haphazardly just happening. It's part of the global plans for having a global currency, global government, and global financial system. And screw that. Anyway, that's one reason I want to avoid digital currency. Because, you know, the whole principle of the fiscal money is it's hard assets that you own. And it's not the only thing you want to own, but it's part of your strategy. Let me put it that way. That's one facet of the overall strategy.